A paper asset is like a stock. When the average person says my investments are diversified, they generally mean something like I have stocks in blue chip companies, I have some emerging market stocks, and maybe I own some AI stocks. So I'm diversified. But the problem with that is all of our investments are in paper assets. All of our money is in the stock market, and we've seen the stock market go up and the stock market go down. And even though you own different types of stocks, when you see a stock market crash, many times the broad stock market gets hurt. And this is where you want to understand that that's just one type of asset class. The stock market is just one type of asset class, but it is an important asset class. And here's the mistake that so many people make. They say, I want to come in and buy here and sell here. This is a rough depiction of the stock market where we know markets go up and markets go down. So we want to buy here and sell here, but that's not what actually happens. Instead, what many people end up doing is they end up buying at the top and then they end up selling down here because they panic and they sell. And the reason why is because there's a lot of emotion around the stock market, and because it's paper, it's very easy to buy and sell. You can buy and sell your stocks on your phone or your computer, and here's what ends up happening with the emotion. When markets are going up, people get excited. People talk about how much money they're making. And then you have the media come in and they talk about how people are getting rich buying stocks. Uber drivers are making more money from the stock market than they are actually working as an Uber driver. And then you start to get more people excited, and then you start to hear the Reddit communities and other social media communities talk about if you just buy these stocks, you're going to be able to get rich. Then what do you think happens? A lot of people who have never invested their money before or who are newer investors get excited, and then they start to come in and buy at this area right here. Then you start to see this little bit of a dip, and people start to get scared because now markets start to go down. Oh no, did I buy at the peak? Am I going to lose money? Because now you're investing your hard-earned money and you never want to see it in the red. You never want to see it go down. And then the media comes in and they say, oh no, was this the peak? Is the market going to crash? Are we on the way down? Are we going to see a recession? Are we going to see a market crash? And what happens? Because it's paper, because it's liquid, it's very easy for people to come in and sell. And then as people start to sell, markets start to go down, people panic, and then they sell at a loss. So instead of buying low and selling high, people actually end up buying high and selling low. And this is where, if you're just getting started as an investor, one of the simplest things that you can do is follow a strategy like A, B, B. Always be buying. You buy here, 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 here. You're buying when the markets are going up and down. You can create a simple system where you're buying every week, every 2 weeks, every month, and now you don't touch it. You don't touch it if you're in a recession. You don't touch it if you're in a market boom, and you let the markets do their thing. In fact, do you know how many recessions we have seen over the last century? 16. And so when you have these recessions, markets go down. And when markets go down, most people panic, but they also create great buying opportunities for those that are financially savvy and understand that if you just ABB, always be buying, have an automatic system, just keep buying. You buy every week, every 2 weeks, every month. Well, now you don't got to worry about it, and that has been a proven way to win. But then the next question is, what do you actually buy as a paper asset? Which stocks do you buy? Should you buy Tesla? Should you buy Amazon? Should you buy Apple? What should you buy? And here's the reality. If I tell you which stocks you should buy, chances are you might lose because you don't know when to sell, you don't know when to buy. But if you just want to win, not to mention that you might have a different goal than me because I like investing for cash flow, meaning dividends. And this is where one of the simplest ways that you can start is not try to find the next Tesla, not try to find the next Amazon, but instead just invest in the economy. Let me show you. Now this is where I got to give you a disclaimer because I'm not a financial advisor. I'm just a random guy on YouTube, and investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But let's talk about a few ETFs, meaning funds that you can invest in to give you exposure to the broad economy. One example, VTI. This is an ETF that gives you exposure to the total stock market. This is created by an institution called Vanguard. If you buy one share of this on your stock brokerage, you're essentially buying the total stock market, a piece of all the companies that make up our stock market in the United States economy. ETF example number 2, SPY. This is an ETF that gives you exposure to the S&P 500. This is a group of the 500 largest companies in the stock market. So if one of these companies starts to not do good, they start to maybe go on the verge of bankruptcy, well, they get kicked out of the S&P 500 and they get kicked out of the fund and replaced with another company. This is an ETF that gives you exposure to that S&P 500. DIA is an ETF that gives you exposure to the Dow Jones. The Dow Jones is one of the oldest indexes out there, meaning groups of stocks out there, which is kind of like a little sample of the United States economy. Example 4, QQQ. This gives you exposure to the NASDAQ. The NASDAQ is a group of the 100 largest non-financial companies. So many of these are actually tech companies. So if you're investing in QQQ, you're investing in those 100 large non-financial companies, many of which are tech. And just for fun, I'm throwing in one more, VYM. I am personally invested in this one. This is an ETF that gives you exposure to dividend-paying companies, more specifically, high-yield dividend-paying companies. Again, this is created by Vanguard, so if you like cash flow, this is one that you can consider. But there are many other types of ETFs. This is just a way to get you started on your research. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.